Dave Morgan joins us next from the Morgan Report. And Dave, on the day you and I are speaking, it's a Wednesday. We've got Dow Jones Industrials down about 520. Looks like the European markets are falling apart. Quite honestly, outside of gold and silver, it's hard to find something that isn't falling apart. So why don't we begin with the gold market? Because gold has been a laggard up until recently behind silver. Now gold is moving to the forefront again. So let me get your take on the metals.
Well, gold, I think, has proven over and over again that it is much more stable than silver. I mean, go back to the 2008 crisis. Gold fell off, but not drastically, where silver moved drastically down, rebounded. It basically was in a short squeeze situation at the bottom. I mean, unless you're buying off the futures exchange, you're paying about a 30% premium to get physical silver. And from that point, under $9, it moved all the way up to nearly 50. So silver obviously is smaller and more volatile and moves both directions more so than gold. Gold is a much bigger market than silver. So I think anyone that has substantial funds, be it private individual, a money manager, a pension fund, a hedge fund, sovereign wealth fund, or a nation state, they really have one choice, and that's gold. And I think that's what you're seeing more and more and more as this crisis unwinds further and further and further. So that's the impetus behind gold, in my view. Silver, on the other hand, is in many ways just as valuable as gold. To quote Jim Dines, you can spend a gold coin anywhere in the world, and the same thing is true of a silver coin, and that's almost an exact quote from James Dines. He's right. Silver has been coveted as a precious metal for eons, just like gold has. And the problem is it's a smaller market, and there's more avenues, you might say, to manipulate the price or hold it down, hold it back, such as margin requirements, and maybe you'd like to comment on that or add something to it, Jim.
Well, you mentioned something that if you are a hedge fund manager, if you're a pension, a wealthy individual, gold is probably the investment of choice. You have the means to purchase gold. But, I'm looking at silver, Dave, and how much, let's talk about silver in the sense that it's sort of viewed as money, which it is, but it also has more industrial properties than, let's say, gold. So if there's this perception that the economy is slowing down, there's going to be less demand. And let's also talk about what happens on the supply front with silver, because a lot of silver, as you know, better than anybody else, comes as a byproduct of mining.
Exactly, and it's because of that fear, you might say, that people have that it's an industrial metal primarily or whatever, that, I'm going to stick with gold, it's safer, it's more stable, and that's true. But even in an economic slowdown, when I did the 10-year study in March of 2010 and I projected out for 10 years, I looked at the worst-case scenario. I looked at the absolute worst Great Depression, or as Doug Casey says, the Greater Depression. And I looked at it in that context. And in that context, industrially, I'm looking at just the industrial side for now, and I'll add on the investment side in a minute. I eliminated all cell phones, all iPads, all computers, all electronic functions for silver. I looked at three things. I looked at food, water, and energy. And I think everyone would agree that food, water, and energy are probably going to be very much needed in a depression. So if I only took those three components, the energy being primarily solar power, water purification, and food processing, manufacturing, and spoilage. In other words, they're using like nano silver in some of these plastics now to preserve the food longer. Those three alone will take us into a deficit situation industrially within about 3 to 4 years from right now. That, again, doesn't count anyone buying a flat-screen TV, any new computers sold, any new electronic gizmo. So it's extremely conservative on that. But then if you look at the monetary component, I just have to go back to when I was asked as one of the experts in the Silver Investing Rules book. They took 150 of the best-noted people on the planet to compile the investing rules. And, of course, I was asked to do the 10 rules of silver invest. And rule number one is rule number one for a reason, and I'll read it again. One, when all else fails, there is silver. No one wants to be a prophet of doom, but the simple truth is that silver is the world's money of last resort. should a severe economic collapse occur, leaving paper assets worthless, silver will be the primary currency for purchase of goods and services. Gold will be a store of major wealth, but will be priced too high for day-to-day use. Thus, every investor should own some physical silver and store a portion of it where it's accessible in an emergency. Now, when I wrote these 10, and that's rule number 1 that you can get for free on my website, the gentleman that compiled this book called me up, and he complimented me because he was somewhat familiar with gold, hadn't given silver a thought, really, searched kind of high and low to find someone that he could even consider to be a silver expert to get, these rules. But when he read that rule number 1, he says, that makes perfect sense, and I never thought about it. Some of the more gold-centric people, and I'm not going to name names, Jim, but you know them as well as me, have actually taken a bit of a stance similar to what I just read. These guys were pretty much gold-only guys, but then they realized that from a practical aspect, if things were to get really bad, and I'm not saying that they would, but they could, that silver would certainly be the way you buy, a loaf of bread, a gallon of gasoline, swap something with your neighbor, maybe barter, whatever. And that's the practical application of silver. Again, silver has been used as money for more places, long periods of time, by more people. More silver has changed hands in commerce than gold ever has or probably ever will.
And this gets back to, as you mentioned, that in day-to-day commerce, silver would be the currency of choice because, you take a look at the ratio between gold and silver, and let's even talk about coins and practicality. How many people right now can go in, let's say a coin dealer, and plop down over $1,800 just to buy 1 ounce of a gold or a gold eagle, as opposed to, let's say, paying $41 or $42 for 1 ounce of silver. And the commerce, or if it ever got to that, silver obviously throughout history, that's been commerce. That's the way people traded. If you were to go back thousands of years ago, the wealthy people, the princes, the nobles, the emperors, they held gold. But the guy in the street, if he was buying a loaf of bread, he was paying for it in silver.
Exactly. And I've, to double the argument, I always said that there'd be a point in time, and no one knows the magic number, but when gold gets so high dollar-wise that people will shift to silver. We saw it in 1980. I was right there when it happened. And people, caught the gold fever late in the march to $850. And I don't know the exact point, and it varies person to person, but somewhere around, $500, $600, it's like, geez, all I'm going to get is a few gold coins for all this money. I'll buy silver instead. And you saw this big push at the end for people moving into the silver market. That was in 1980 when there was roughly 3 times the amount of physical silver available for purchase that there is now. We didn't have the internet. You didn't have the Chinese buying silver. You didn't have the Russians buying silver. You didn't have the availability to, make the purchases that you can now. So when people ask me, how high do I think the price is going to go? I point out those factors and ask them the reverse question. How high do you think it's going to go?
Here's something interesting, and you alluded to the supply. If you just backed out and got it down to food, energy, and water, we'd be running a deficit in the next couple of years. And the fact that we don't have large vaults around the globe, like the COMEX, central bank vaults, private vaults, that are sitting on large vaults of holdings of silver in the same way that we do in the area of gold. And when we talk about silver being an industrial metal, so it's a lot more volatile than the gold market. But, Dave, by the same token, if people are talking about, okay, silver's down because the U.S. economy looks like it could be heading into a recession, global growth is slowing down, let's talk about the byproduct of mining, because if copper production goes down or other mineral production goes down, what happens to the supply of silver?
It starts to dry up, or it goes down substantially, and that's the factor that I try to convey, and most people don't connect the dots. But if, one of the lectures I gave, I think it was 2 years ago at the Silver Summit, I looked at the scenario between the Weimar Republic and the present-day United States dollar, and I showed them a chart of copper during the Weimar Republic. And the industrial metals did nothing. They went up for a while, and then they crashed and burned, because when, you're trying to run a whole country based on printing money, and no real wealth is being created, there isn't any demand for any industrial metals. The only metals that did well were the precious metals. And so it's a point well taken that many overlook, that if we were to go into a severe recession, or even further than that, there would be a slowdown in the industrial base, and that would actually cause the amount of silver coming out of the ground to diminish in a significant way. As
we were speaking, I just took a look at a Gold Eagle price, and this is assuming you buy one that I'm sure if you shopped, you could maybe save a few bucks. But Dave, it's almost $1,900. Now, let's talk about a second point that I made here on the program last week, and that is when you take a bull market, and I think all of us would agree here, or anybody listening, that gold and silver are in a bull market. The most important thing when that bull market ends is you own as many units of the particular asset that's in a bull market. So if it was Japanese stocks in the 80s, you owned as many shares of the Nikkei. If it was tech stocks in the 90s, you owned as many tech stocks, or real estate in the 00 decade, as well as the precious metals market. And so let's talk about becoming a sharp buyer, because last week I took a look at, for example, the premiums that one would pay on, let's say, buying a Gold Eagle, a Maple Leaf, a Krugerrand, or a Philharmonic. Likewise, I did that with silver, taking a look at Eagles, Maple Leafs, Philharmonics, or let's say a 100-ounce bar, a 1,000-ounce bar, or a junk bag of silver. And then also I took a look at some of the ETFs. For the first time in a long time, at least last week, you could have bought the Central Fund of Canada at a 2% discount from net asset value, where most of the time, as you know, Dave, that's usually selling for a premium. That premium has now dropped to about 0.5%. So let's talk about becoming a smart investor, because all you care about when this bull market ends is you have as many units of the asset class that's in a bull market.
Well, I agree, and I guess I can expand on that somewhat. One of the things a lot of people don't understand is that the premium on whatever you have in the category of silver or gold diminishes the higher the market goes. For a quick example, Silver Eagles carry a pretty hefty premium. And if you want to buy Eagles, be my guest. I own them, I buy them, I continue to buy them. But they have a premium, and as silver continues higher, when you sell back to the dealer looks at it as a piece of silver. It's 1 ounce of silver, whether it's government minted or privately minted. An ounce is an ounce is an ounce. Same thing with a junk bag. It's got 715 ounces of silver at melt value, and that's what he pays you. So you want to accumulate, as you say. Now, some people have, a bias, or they're scared that they're going to get some silver minted privately, that it might not be real, therefore I want to buy it from the U.S. Mint, and that's fine. I mean, I'm not going to tell anyone what to do. All I'm letting people know is that get as many units as you can. Right now, the best place to enter the market is, as you said, if you can ever get Central Fund of Canada or Bullion Management Group or any of these, what I call holding companies, where we know the silver and gold is actually there at a discount, buy it. You're not going to have to wait very long, and it'll go back to a premium. That's for people that can't hold physical or are uncomfortable holding much physical. As far as physical go right now, still buying bags is the best place to buy it. It's known as junk bags in the trade. I don't like the name, but that's how they're referred. And all they are is 1964 or previously U.S. government minted coins. Now, there's also junk bags in Canadian dollars and other silver coins from the past, but those markets hardly exist. Most of that's been melted totally. There's just very few of that left. And there really isn't a whole lot of junk silver and U.S. coinage left. There is some, and that's the best place to buy it, in my view.